All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market been open here for about an hour. It opened fairly flat. We got the morning sell-off, right? It just kind of seems like every morning we get some sort of, sell flush that comes in here on the market. But we had some GDP data this morning that kind of pushed the markets on higher. What do we know about GDP data? If it pushes the market up, the market's going to go back down to where it was before the GDP data. And if it pushes the market down, the market's going to go back up to where it was before the GDP data, because when it comes down to it, investors are not making decisions based on GDP data. And that's just the long and short of it. And it's what we see every time the data is released. And, yeah, I know the news services and everything else make a big deal of it and everything. But when you look at the price action, we almost always see, the action get erased. But market opens up fairly flat and sells off, right? I mean, sells off in the first first hour of the day. I mean, we've seen that over and over and over. And then gets bought back up, and we've seen that over and over and over. It's kind of a broken record out there in the market right now, but we still see some differentiation out there. Some heavy differentiation, in the market, driven by either analyst or earnings, or a broader sector story, and we see that coming in here today. Now, before we get out and take a look at it, let's go and see what we have to do for the challenge test here. Entry trigger here, none this morning. There are no triggers here this morning. And, we've been, since we started this challenge test, we've been in with a market vibe with a neutral signal, and we've gotten very little movement in the overall market. So I'm not too surprised at the rate that they're coming in, but it is a little bit less than normal. But I'm sure it will balance out as it goes forward. Current trades, Alibaba. We have two things coming into play here today. We have the auto exit date that'll come into play, which is today in the afternoon session, so an hour before the market closes. So if the price of the stock is not eclipsed 195.13, which, let's face it, chances are it will not have eclipsed that number, then we will be looking and backing on out there of it. So anyway, Baba, we'll most likely have to punch on out there by the end of today. The current the stock exit level 184. We can see Alibaba's trading above 184, so it's not at the exit level. It's 187.17. In fact, 187.17 is pretty close to the entry level here for it. 80 cents. The stock just hasn't gone anywhere. It's just kind of stayed in this consolidation area overall. So anyway, Alibaba will ultimately have to exit this afternoon, regardless of anything else. Now, there is a chance, and I mentioned this yesterday, there's a chance we could see Alibaba give a refreshed bull signal here today. The stock would have to close up about 50 to 80 cents to have a chance for that. That's what it would have to do. If it closes here, there would not be a chance of it. But in that 50 to 80 cent area, there is a chance of it because the low from yesterday did not eclipse the low from last week. So coming off of a higher low, so stays in that algorithm mode and that bullish algorithm mode. It could give a refresh signal here today if it's able to close up. If that happens, we'll go out, we'll take a look, we'll address it, we'll deal with it. We'll have a couple decisions to make there with it, and I'll kind of talk through those and what would be the case there, and how it would be kind of managed on a live basis. But anyway, that's Alibaba. And really just kind of hanging out, hanging out here since we got in here for the challenge. All right. Now I mentioned there's some sectoral movement out there. We saw Intel earnings after the bell yesterday, and yeah, you can see the stock reaction, and it deserves the reaction. It well deserves the reaction. This isn't one where you say, market's overreacting or something like that. It was priced for perfection going in. And in a similar way to Microsoft. Microsoft was priced for perfection going into earnings. Microsoft gave perfection. Intel did not. And in fact, if you kind of look through Intel's numbers, there's some pretty negative elements there for the chip industry. And, you see analysts coming out and commenting here this morning and going and downgrading things like Western Digital, things like Seagate here this morning, and downgrading these stocks based on Intel's earnings, right? And the soft part of Intel's earnings is in the chip space. NAND flash, not giving a whole lot of hope for, and that's, pushing Micron down. You have one analyst out there saying it's a much more positive read-through for AMD than it is for NVIDIA, which I see how the argument can be made there. But what do we continue to see? That the chip space continues to soften. And there are a lot of recovery hopes, right? And those hopes are high that the second half of this year we'll see the chip market recover. But so far, that's not what we're seeing. That's not the that's not what the data is showing or the data is reflecting. That's a hope in data change, right? And Intel kind of put a little bit of cold water on that hope, and so we are seeing the entire sector get hit here pretty hard. And rightfully so, rightfully so. But then we had Amazon earnings, and Amazon earnings, they're great. It's a good earnings report. It's a really good earnings report. In fact, you have analysts out, upgrading the stock left and right here this morning, rightfully so. But Amazon announced that they're going to spend $800 million this quarter. $800 million. Just a one-time type spend. Amazon does this a lot. They have done this a lot over the years. They will continue to do it. And I think it's a very important kind of element to what Amazon is and how Amazon trades. When Amazon announces that they're going to make a big spend, the stock tends to go down. We tend to see it under a lot of pressure. But as the subsequent quarters unfold, Amazon has a knack and a really good ability to take that investment and to turn it into growing revenue and, more importantly, growing profits. When Amazon announced Amazon Web Services, AWS, and that they were how much money they were investing into that, the stock got hammered. It absolutely got clobbered. And it got clobbered for a couple quarters. And then Amazon just started proving, hey, look, this is piling into the bottom line. It was back here in 2015, when it's just getting hammered. And, they just proved, hey, you know what? This is what's driving the growth. And they've used it to drive the growth here as it's gone forward. Now, today they announced that, or yesterday they announced $800 million to invest in one-day shipping. So for Amazon Prime, instead of 2-day shipping, guaranteed 2-day shipping, now 1-day shipping, which is a big step forward. It's something that, most people knew was coming eventually. But as Amazon has increased the number of distribution centers and everything else around the country here. And so it's not a huge surprise in terms that it's happening. I think it's a little bit of surprise that it's happening right away. I think most expected it to, still be some time until we saw this from Amazon. But it's putting its competition under pressure. That's what it's doing here this morning. It's putting Walmart under pressure. It's putting Target under pressure. I mean, these companies are trying to keep up with them from an e-commerce standpoint. It's putting them under pressure. It's also putting other shippers like FedEx under pressure, right? I mean, we saw the UPS earnings garbage yesterday. I mean, it was just terrible earnings, terrible earnings. And, now, more pressure here. Why? Because UPS and FedEx can't fulfill one-day shipping as things stand right now, right? They have to make either investments to be able to fulfill it, which are they going to want to do that? you go, well, Amazon's looking to fulfill some of this on their own. So, all right, are they going to invest in what Amazon's doing, and while Amazon's trying to find a way to rely less on FedEx and UPS? So it's an interesting conundrum that these companies are stuck in. But very important announcement there from Amazon. But I think one of the most interesting announcements from Amazon is the streaming music announcement, and they're ramping that up. Really gonna go full tilt into that. And at first you would think, hey, you know what, Spotify, this is gonna really hurt Spotify. Spotify is streaming music IPO'd a little bit less than a year ago, and this is kind of the industry standard for some. We still have Apple Music and Pandora and all sorts of other streaming services out there. Heck, YouTube. But Amazon announcing they're getting more heavily involved. So you say, well, why is Spotify going to go up? What would drive Spotify? Why would Spotify rise with Amazon, saying that? Well, because Amazon only enters industries that are growing and growing substantially. Right? When Amazon looks, and when you look at Amazon over the last 10 years, when they say, hey, we're going to step in here, we're going to step in there, they're not getting into industries that are already crowded and topping. They get into industries that are just starting to grow. When they announced Amazon Web Services and started to get into that, they were getting into an industry that, yes, it had already been around for a little while, but it was entering a serious growth phase. And one of the things about streaming music and this kind of idea of streaming music, it's been in a contraction phase for a long period of time. But over the last 2 years, we've seen it in a strong growth phase. I believe, 27% increase over the last 2 years in streaming music. And the expectation is for that to increase significantly going forward. So, this idea of Amazon getting in, instead of kind of you're seeing that as, more competition, it's being seen as, hey, you know what? This kind of confirms that this industry is on the rise, that there's a lot of good here to be taken advantage of. And that's a big positive here for Spotify, and I think it's something that could, ultimately drive Spotify higher in the months to come, and maybe even longer there. Spotify in and of itself is a very interesting story because they IPO'd without any stock restrictions or lockup periods. Most times when companies IPO, those that buy, they have to hold the stock for 6 months or a year. Every time they have, every company has different periods, but this one didn't have that. They didn't add those restrictions, right? They had a few kind of big investors come in and say, well, we're not going to sell any for a long time, but they're not beholden to that. They're not restricted to that. So it's made for a very interesting post-IPO or made for a very interesting post-IPO action in Spotify. But this is one of the better catalysts that we've seen for Spotify here in a while. And one that obviously could be a one-day flash in the pan. But I think over time, this kind of Amazon music streaming ramp up, and Amazon already has some streaming music, but the continued ramp up there is actually more of a positive for Spotify than a negative. All right, so we've seen that from an earnings front. Intel, pretty negative for the chip industry. Amazon, for Amazon stock, it's kind of mixed. It's not, that huge spend is going to keep it a little bit dampened. But, it does have a real positive read-through for, something like a Spotify, maybe Pandora in a lesser sense, but, that's not very tradable anymore. So overall, Spotify's kind of, to me, one of the better plays on it. And I think it's still a big negative for FedEx and a big negative for UPS. But I guess I've rung that bell enough as far as, what I think about FedEx and UPS here. All right, so anyway, we've seen other earnings. Ford reported earnings. I've not gone through the report here yet, but it is a huge upside reaction here on the shares. And, this is something, if you've followed Ford for a long time, you don't see this type of earnings reaction on Ford. But look at the earnings beat. The earnings beat, pretty hefty here. Pretty hefty earnings beat. Revenue beat again. They're on revenue. That's that's a pretty big positive here for Ford. Now, can they do that 2 quarters in a row? We will see. But when we always kind of have to go back to when it comes to Ford is they're a cheap company. They're a cheap stock. They're cheap on a PE basis. They're cheap on a dividend basis. They are cheap on a book value basis. They have been a cheap stock for a long time. They have a book value of $9 a share. I mean, it's just absolutely, ridiculous how cheap the stock is. So is there room to run? Oh, yeah. I mean, this is a stock that could run another $4 or $5 and still not be expensive from a fundamental, from a valuation metric. If you slapped on some of the valuations that the market's giving to things like Honeywell or Caterpillar, or the market's even giving to something like Triple M, who bombed on earnings yesterday, you slap some of those valuations on Ford, Ford's a $15, $18, $20 stock, depending on, which valuation you slap on it. So it's a very inexpensive name, very, cheap name, high dividend, a little bit of positive spark here. It's a beautiful chart, beautiful breakout action here on Ford. I will be going through the call and through the earnings here, as the day or later on here today. But it's one where yesterday I talked about some of the truck, what do some of the truck sales, kind of look like, and that would be, important here, and we'll be, looking here for that. But, it's very interesting to see Ford have this positive a reaction. There is a criminal probe kind of going on. They talked about, the criminal probe that's going to be happening, in terms of the emissions testing. But when it comes to the automakers, that's, just same old. We've seen that over and over and over as the years have gone on. And, all it results in is some sort of, cash outlay and slap on the wrist, and, they move on. It's not a big business changer there. Occasionally we get a Volkswagen situation that is, but I don't think the market's looking at this and expecting that type of situation, to emerge. So, on the surface, the numbers look really good, but we'll dig in and we'll talk about it a little bit more after I do dig in there to the earnings on Ford. Okay. So that kind of wraps up this earnings week. It's been a very interesting earnings week. It's been one where if you look at tech, you say, man, tech is still very strong. As long as you're not talking chips, tech is really strong. It's one where you look at industrials and you say, Caterpillar, Triple M, ew, not so hot. But the reality is when we go through it and we look at the revenue growth, and that to me is the biggest key when it comes to this earnings period, right? Companies like Visa, who traded down after their earnings, it wasn't a blowout report, but it was a really good report, and we talked about it a little bit yesterday. Yeah, they sold the stock on it, but any reason to in the earnings? No, right? 8% revenue growth. Market average is what? 5%, right? And these companies that beat the market average on their revenue growth, these are going to be the companies that are buyable. These are going to be the companies that, investors, if the market continues to hold up, will be looking to chase into. And these will be the ones that will hold up the best if there is a pullback. The ones that won't hold up if there's a further pullback in the market are the Caterpillars, the FedExes, the UPSs of the world, the Triple M's. They're going to get hammered if the market pulls back some. The ones with solid earnings, yep, Microsoft may be, ultimately topping or something like that here. It may have been a Goldilocks report. It's never gets better, but it's not going to sell off 30% or 20% on the next big market sell off. It will have a little resiliency there. But Caterpillar, Triple M, UPS, FedEx, yeah, they all have that potential. And so, as we kind of go through earnings and as we kind of, get into next week, we'll have a lot of other earnings. We'll continue to see this, kind of this element come into play, and it's a really nice element and something that absolutely helps to define watch lists and trade biases and to help in terms of trading going on forward. There's a lot of speculation about the market out there. Talk of, hey, what, the market is, about to collapse or the market's about to melt up and all that kind of stuff. And I will talk about that later today. And we'll talk about different ways to play some of those theories, where some of those theories are coming from, some of the COT charts that are driving some of that some of that argument. But we'll look at that this afternoon and talk about that in a little bit more detail. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.